And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, traders, and welcome to the Market Forecast. Today is Thursday, February the 17th. I'm John. Thanks for trusting me with your time. Always looking for accurate context, good risk management, and patience. Crude traders, we've got more volume in the April contract today. Hopefully you've noticed that, and you've switched over to April. No big deal if you haven't. By tomorrow, we certainly want to be trading the April contract. More volume, better liquidity, better information. This morning, 7:30, lots of numbers came out, lots of kind of conflicting numbers. The jobless numbers came out, the initial jobless claims, they were looking for 219,000, came out higher at 248,000. However, the continuing jobless claims were lower. They were looking for 1.6 million approximately, came out 1.638. 1,638,000. Housing starts permits were higher, starts lower. Philly Fed, they were looking for 20, came out at 16. Apparently things are slowing down in the city of brotherly love. We're still waiting for 9:30, the nat gas numbers to come out. The focus by traders this morning, there's still a lot of potential hostilities in Ukraine. That still remains top of mind here. There's been apparently no meaningful withdrawal of Russian troops in forward positions. As a matter of fact, there are those that say they're actually bringing more troops into the area. Earnings in focus this morning. We had Walmart beating expectations, Nestle beating expectations, Airbus beating expectations. Pretty long list today. Nothing major due out after the close today. And crude prices took a nice tumble yesterday. Kind of a 1-2 punch. Higher stocks reported by the EIA, 1.1 million barrel boost in crude stocks. But we had the president also talking about making some sort of arrangements to fight the costs at the pump. So it's going to be another interesting trading day. As always, make sure you hit the lucky like button. Share, comment, question, feedback, and heckling and love are always welcome here at the Market Forecast. Make sure you subscribe to our YouTube channel. And again, thanks for subscribing. We recently reached 15,000 subscriptions, and we thank you for that. Looking at the VIX, the dollar index, and the 10-year yield this morning, VIX up 5.5%, 25.64 as our equities are starting to leak to the downside here a little bit. Dollar index pretty much flat, 95.83. The 10-year yield holding steady at exactly 2% the last time I looked. Got to take a look and see who's here with us this morning. Scott saw and he conquered. First in the room, you win the prize this morning, Scott. Shaw, good morning. Brian, Theo, Rick, my brother, Andre, Jeff, Drew, good morning. Spencer, no fireworks from the numbers this morning. And good morning to you as well, Spencer. Jerry is awake. Hopefully John is too. Terry, good to see you. Jeff, Alfred, I got lost. Galen, Laura, good morning. Rusty Golfer, I really can relate to some of these chat names. Very good name. Mirek, good morning. Devant, Ronald Stoneberg, good morning. Manuel Caesar, Vince, Jay, Denny, Dan, Max, Carol, Dr. VJ, good morning. Mr. Fox, Sarah, and I find Dawn to you as well. Morning, Jimmy, Three Lions, Insight, Rob, T, Isaac, Luis, Fred. Hogue says, love is now welcome at the Market Forecast. I love trading, love the Market Forecast, and we love you, Fred. Brody, Trading Research, Romaine, good morning, and Chris, good to see everybody here. All right, so we got our challenges cut out for us every day in trading. We're going to try and remain patient. Hey, my guy Ray is here. Ray, good to see you. Try and stay patient. It has been a rough week. Just kind of looking at some of the people that I follow on Twitter, a lot of folks saying, it's been a rough week for even professional traders. It's all about risk management. When the market is not giving clear ideas, clear signals, clear thoughts, clear anything, it's a time to sit back, relax, and just wait for the market to offer you an opportunity that's too cheap for you not to take. We had a couple of those opportunities yesterday. They would have been really tough trades to take, of course, and they're never really going to be. But we were just, stay patient, look for opportunities. We had a question yesterday in group coaching. Alessandro was there and asking about what it means for repair, and we are kind of in a potential repair area here in the S&Ps. We're going to look at that shortly here, so to make sure I've taken care of all of our business. Don't forget, if you are trading crude, volume is now greater in April. Trade April crude. We're going to be opening here in just about 8 minutes. So don't forget, if you haven't traded yet, just switch to that April contract. There is a $1.75 discount from March to April, so adjust your levels accordingly. Expediter, Cole, good morning, Caden. Michael H., good morning. Expediter, Nico, Andrew. Michael H., risk management is number one thing in trading. Absolutely. Al-Haji, good morning. Janus. Michael, couldn't agree with you more. It's the one thing that we can control. We can't control price action. We can't control direction. All we can do is manage our risk. How much are we willing to risk on any trade? And I'm always looking at risk first. If I'm going to take this long, for example, I'm thinking, okay, well, where's the point of invalidation? Where does this long kind of tell me that it's likely to fail? And once I've established that level, I'm going to be looking for the best possible trade location to get into that trade. Equanimous Trading. A good morning. Is DJ Hogue sponsored by Haagen-Dazs ice cream? I like that. I'm going to see if maybe I can start that company. The only thing we can control is traders. Yep. All right, so let's jump in and see what we're seeing here. Let me make sure I'm set up. You got the daily in the S&Ps here. Let's take a look. Okay. I'm going to grab my notes here. Was there a hint of buying yesterday in the open interest? We added 5,500 in open interest. We added open interest in the Nasdaq as well. We'll see that shortly. The market is really kind of keeping itself prepared for just about anything. We've got central location and weekly kickoff levels inside last week's range. The market kind of acting like our tennis player, going back to center court, waiting for the next volley. It's ready. We kind of feel like we need to this week be ready for anything or nothing. The market has been choppy at times. It's been whippy at times. It's really kind of given us a little bit of the business. Now, right now, we're inside extended trading hours from yesterday. So that's going to kind of give us some kind of idea of some sort of an extreme. Okay, take a look here at the 30-minute chart. Oh, no. Rick is coming out here watching probably the news. Apparently, there's artillery shelling in eastern Ukraine. That's not good news. Not good news at all. So that's going to be. We're all well aware that we have to keep that in mind, and we know that these markets are going to be on a hair trigger should these things start to begin to escalate. Hopefully, that's I'm hoping that's rumor, and hoping it's not true. But hostilities, you never know. Oh goodness! All right, so settlements all the way up here in the S&Ps, 4470. Put that on your charts. Yesterday we had a double distribution trend day. In other words, the early distribution of time and volume was down here. There was a change in perception. The market looked higher, and we started to establish an area of balance up here. So just kind of looking at things this morning before the numbers, we talk about potential for repair. When we open in the middle of a double distribution trend day, there is a tendency for the market to try and test to both high volume nodes. So the high volume node down here would be the point of control. A high volume node up here would likely be settlement. We have to be aware of what the overnight positioning is, and we can look at that and say, well, we can make an assumption that the overnight position is to the short side and getting shorter as we speak. So when the market opens, if we open outside of this repair area, there's a bigger likelihood of a larger move in either direction, really. We're still opening in range and in value, at least if we were to open now. Watch and see what happens with this information. One Ukrainian soldier was injured along with 3 civilians. So fueling Russia-West tensions over Ukraine. Rebels and Ukrainian government forces accused each other of violating ceasefire agreements on Thursday and using heavy weaponry, including mortars. I'm going to be praying that this thing just ends fast. My goodness. Praying as we speak. So the overnight shorts in range, in value, new information coming into the marketplace is certainly going to be throwing a horseshoe into any plans that we may have made for today. Be careful. If things do get crazy, I'm just going to back off. I don't want to take any undue risks this morning. I'll let the market establish some kind of range or some sort of market state. If we do become trendy, if we do create a trend in the day today, it's going to be very difficult for me, always has been, to try and get into trends that are already underway. Be careful. Be careful today. And that speaks to everyone. Crude oil. April crude. We've adjusted our weekly kickoff levels down $1.75 to account for the discount from March to April. Upside structure remains, but I'm beginning to really question how good of a job is it doing getting there. We're always asking ourselves, what direction is the market attempting to go, and how good of a job is it doing getting there? Well, we see an area of balance here. We see an area of balance here. Lots of space between them. We see an area of balance here and an overlapping area of balance here. Now, this new information, of course, if we get into if there is some sort of hostilities between Russia and Ukraine, there's going to be sanctions. There's going to be probably a squeeze in energies. We see crude oil moving to the upside as our equities move to the downside. Kind of an inside day and extended trading hours again. There's no reason to be jumping into anything right here in the middle of this range. We lost 16,000 in open interest yesterday, but again, that is very blurry because of rollover. We have, volume, of course, increasing in the April contract, while it should be decreasing in the March contract. So that is also very blurry for us. Take a look at the 30-minute chart here. We're going to see if the opening range offered any opportunities here shortly. So the market actually is holding overnight longs. The market opened at 5 o'clock down here. We're trading here. We're holding longs, and we are opening with a gap. We're just opening. We've established that we're opening with a gap. If we can't close the gap relatively early, some of these overnight longs might start pushing price lower. If there are hostilities and this begins to escalate, of course, we're probably looking for some big moves in crude today. Can we pick a direction now? No, I don't think that we can. Settlements up here, 91.83. Here's the first minute, April. So the opening range is the low of the regular trading hour session. Some of our longs are probably getting comfortable right now because they are seeing buying coming in the regular trading hour session. We're going to see if we can close the gap here. If we can't close the gap relatively early, then we trade in the direction of the gap, which would have us looking to the downside. Opening range may be something we're going to be looking at today because we've opened out of balance from yesterday. Is there potential for repair today because we have a point of control down here and a point of control up here? We have a gap here. We're near the gap. It is entirely possible that that could happen. This is no longer a valid unchecked point of control. We have one down here. We have this point of control, which is a valid naked point of control. That comes down to this level. Boy, I'm just really. I'm with you, Sarah. Let's all expect peace will prevail, of course. So all I can do is trade what I see here. Opening range, it looks like it's likely to fall here. Yep, we've traded both sides. It's no longer a viable opportunity. We have not yet closed the gap. That is probably the most important nuance right now that I see in market-generated information. Outside information can tell us a whole different story. So I'll be looking for a move towards this point of control and this point of control because as the market is in a range, we are looking at short time frame control. Short time frame control in rollover. We know that our longer time frame traders are looking for the opportunity to get a cheap roll instead of becoming directional. I don't know if they're going to be able to accomplish that. We're taking the market for what it's telling us. Kirill, you are Ukrainian, and of course, we are praying for everybody and peace. Here's the Nasdaq. Open interest increases slightly. We added 2,500 in open interest yesterday. An inside day again in extended trading hours. We're centrally located in weekly kickoff high range. Last week's range, the market is really, I believe, just kind of waiting for new information. And I think that the most important information that we're going to be seeing in coming days is going to be regarding the potential hostilities overseas. So we got to keep an eye on that, and at the same time, take opportunities that the market is offering by what the market is telling us. We got to trade what we see. We can't anticipate anything that we can't control. These markets are on a hair trigger. They are like a sore toe. When you have a sore toe, it's inevitable you're going to bang it on something. Again, we're central in range. Here's the 30-minute chart. All right. Okay, Nasdaq in a similar situation as the S&Ps. We've got overnight shorts in this market. We have a situation where the market may open in an area that smacks for repair. Again, we can expect anything, or we can expect nothing from these markets today. They're going to be on a hair trigger as things change, and it looks like they may be changing minute to minute. The thing that we are, kind of looking at in the nuances here in the Nasdaq and in the S&Ps is the location of the open. If we open in the middle of these two high volume nodes, there is a probability, barring new information, barring news of something happening, then there's a higher probability of trading to both of those high volume nodes. Our overnight low and our overnight high have already traded to both of those extremes. We just traded back down to it now. We're seeing a little bit of a recovery. So when we open at 8:30, if we open in the middle here, I'm going to trade what I see. I'm going to wait. I'm going to see if I get an opportunity at the high volume node here or at the high volume node down here, which is basically our point of control from yesterday. All right, let's see what we're looking at here in gold. Okay, so we had a boost in open interest on this move to the upside. We had a pullback. We've been putting up really good volume. Yesterday, not so much with the great volume, but we added 9,000 in new contracts on an up day. That is new business moving the market to the upside. We had a test and a move through our weekly kickoff high here in the overnight session, 1882. The market pulls back to that level. It might be an interesting level for a long. It may become supportive as it was resistant earlier in the week. Again, that weekly kickoff high might be in play. We're looking for continuation in volume and open interest, or are we looking for rejection? Based on market-generated information alone, hostilities, uncertainties, geopolitical difficulties can continue this market moving to the upside, as well as increasing inflation. So the market is acting healthy. We're bringing in business. We are holding up in volume. Look at the volume so far today. We've already beaten yesterday's volume. It's just the early morning here. We're going to be putting up some pretty decent volume, and it's going to be a very interesting trading day here in gold. We've got a lot of overnight longs in this market. Those overnight longs seem to be continuing to get paid. We're looking at Delta being negative and putting in new highs. That's a sign that there may be buyers in this market. We're getting a nice pullback now, but we're going to have to wait and see what happens. I'm really interested in seeing if we can get a pullback back to weekly kickoff high. Was resistant in the overnight, blasted through last night. A pullback to it could offer a wonderful cheap opportunity. Take a look at the euro now. The yawner. Volume and open interest continue to dry up. We lost 7,000 in open interest yesterday. Volume continues to dry up. This market is really kind of stuck now in this mire. This week's range, this week's high and low, are set as extremes. We're range bound inside of those levels. Our high here, 114.02. Our low here, 112.87. Anything in the middle is short time frame control. We're going to be using range bound rules. In other words, at the extremes of the range, we're going to be fading for a move back towards the center. On a breakout outside of this range is an opportunity for us to go for a continuation. Now, we're right at our high here yesterday, really along the highs of our balance area that we were in for about 6 weeks here, it seemed. Back at the end of last year and the beginning of this year. Take a look at the 30. Overnight shorts were in range, we're in value. Not a real reason to get too aggressive in looking for opportunities here today. Again, we're in range, we're in value. Very little change in the perception. Volatile overnight, but I'll be looking at the high here for opportunities or the low down here for opportunities in bigger ways. There may still be smaller opportunities. Short time frame control. Remember, short time frame levels are likely to be respected. Last night, 2 days ago, the low of the day, respected. Value high from yesterday, somewhat respected. All right. Take a look now at the Tenure and the Nat Gas, which is really presenting a healthy upside auction. The 10-year open interest higher, 5,700. Not huge for the open interest for the 10-year. Still dragging along the bottom here. Rates really kind of holding steady right at that 2% mark. Range bound really over 5 days. 1, 2, 3, 4, 5. Central in the range. Central in last week's range. And still, I think, continuing to try and exhaust buyers down at weekly kickoff low. Here's the 30. A decent move here this morning. Holding overnight longs. We opened with a gap. We just came and closed that gap. No sign of reacceptance in value or range from yesterday. Gives us an opportunity to look at this as a potential long, which allows us to limit risk. Always thinking about risk first. Let's take a look at the Nat Gas now. Fascinating market this is. Okay. Continuing to increase volume. Increase open interest, adding another 13,000 in open interest just yesterday. When we think about an auction process, we think about, okay, how good of a job is it doing? It's adding volume at higher pricing. It's increasing in open interest at higher pricing. This is a healthy upside auction. We're getting a little iffiness here. But I'm still looking at this market as a market that I want to look for opportunities to buy weakness. Check the 30. Hello. There we go. The settlement is up here, $4.71, almost 72 cents. Opening in range, back into value after opening outside of it. Taking a little bit of a break today, maybe. We have to see what happens. Of course, this is also going to be very sensitive to overseas hostilities, but we have to trade what we see. I'm going to be patient this morning in this market. I'm going to look to see if I get an opportunity to buy this market as it exhibits a weakness against an inflection level. We still have a little bit of this gap to finish down here. I think this would be a really nice pullback for us to look for an opportunity to springboard higher off of that. Shannon, the volume profile is over here. It's one of the drawing tools. You click on this, there's your volume profile. So you click on that and let it go, and then come to the time you want to start. So this is, this market is just opening, so we're just going to go there. Now it's going to add 2, and I'm going to just bring this over. Now we're seeing the regular trading hour session only. You can always expand or change the time frame on that. You're welcome, Shannon. All right. Let me get back here. Okay, I'm just going to see what kind of questions we have here. Jimmy's struggling with a trading plan and number of trades as a scalper. Some days when I'm trading well, it seems like I should trade 10 to 20 trades. Other ways I should trade like 5 is the max. Yeah, it's difficult to know what kind of day you're going to have coming into it. Part of your trading plan should be preparing yourself the night before and the morning before to look at the market that you're trading and think about, what is the market telling me? What are the probabilities we're going to have a range type day? What are the probabilities we're going to have a day that's a wider range or a trend day? Put some hypotheses in place for the trading day, and then see if one of those hypotheses comes true, and then trade to that hypothesis. Right. Fred's got a question. How is your double distribution repair day scenario affected by an open outside of the 2 ranges? If price returns to the area between the 2 distributions, will you still look for repair? I think it's a lower probability if that happens. But like we all know, Fred, anything is possible. Yeah, crude oil rollover is a tough trade. Anytime the market's rolling over, the information becomes a lot more difficult to discern because you're splitting volume, you're splitting open interest between several different contract months. It's difficult to know what the market's actually doing. What's up? Good luck out there today, everyone. Dead letter opener. Thank you very much. Yeah, Miss Natty Gas isn't messing around. Has the new yacht ordered. Looks like Bitcoin's scary, right? Yacht patter. Shannon, there's the volume profile. We took a look at that. You're welcome. Spencer started setting my TPOs on Euro futures to cover the London Open to the U.S. close. What color coding in the TPOs to differentiate the difference between UK and US sessions? It's up to you. Whatever looks for you, whatever looks pleasing to your eye. It's kind of hard for me to tell you which colors. Thank you, Rick. Casey, first day of the combine. Welcome. We're looking forward to your success. Thank you, Luis. Pajoli, your perspective is really helping me. Good. Becoming a more patient and getting better. Stop, take profit. Good. Jimmy, my pleasure. All right, let's take our deep breath. Stay humble, grateful, and creative today. No recap today or tomorrow. We've got a company thing that's going to keep me from doing the recap for you today. But I will see you tomorrow morning on the market forecast. Be good to yourselves. Be good to each other. Keep praying for peace. Don't forget. Be kind. to each other, and get out there and profit today. Be kind to yourself. Make some money. Have a great trading day. I'll see you back here tomorrow morning again. Have a great session. I'll see you in the proverbial trading pit in a couple of minutes. Trade well today. Peace and blessings for us all.